All right. Well, he is my great friend, Adam Mesh, and we met about 10 years ago. And it's a long story and it's too long to tell, but to make it short, Adam actually helped me put together or actually helped support an event I did, an online event I did for Tony Hansen, which a lot of you might know her. She was having some health issues, and we threw a big event called Traders for Tony. And we rallied, I think we raised about 70 grand for that, and Mesh was part of it. And that's where he and I became instant friends because we had a phone conversation and it was like, boom, we clicked. And I do not go to the city without making time to go see my friend Adam Mesh. And he's a rock star in our industry. And look at him wearing his Tasty Works. Look at you over there. You about to throw up a Budweiser and a dial soap too? You're like, I see you, Mesh. Give us a sound check, Adam.
You hear me okay?
Oh, hear you great.
Sound is fantastic.
All right.
So let's preface this with Adam just had a huge internet crack and he was able to figure it out and he's here now. So we're just going to be patient if something happens with Adam during this event.
No, we're good now. Whatever it was, we're good.
That's awesome. I love to hear
I'm
good.
sharing my screen, okay? And amazing crowd. Awesome. I'm so excited. I'm pumped. I like it.
All right, Adam, let's all you, baby. You have an hour.
All right. Desktop one, share. And okay. And we're off and running. Okay, let me just make sure the chat is good. What's up, everyone? Happy to be here with you on this fine Tuesday. Markets are hopping today. I was trading a lot. I was trading Zoom after hours last night. A lot of stuff going on. What I'm going to do today is I'm going to show you my absolute favorite option strategy. Whenever you present in a group of people, you got to bring your best. You got to win the crowd. It's a gladiator-like experience, and so it's my intention to do that. So I'm going to show you how I trade, but I'm also going to use the formula I've used for 20 years to find stocks. Because at the end of the day, it's all about the long game, right? You know, you see a lot of people coming in new to trading. We don't want you here for a minute. We want you here for years and decades, making money consistently all the time, going for that nice upside with a limited downside. So I'm going to show you how to use the power of options to maximize ROI. Okay. No one's ever guaranteeing profit or ensuring freedom from losses. I keep a track record so you can see every trade I ever made, which is good. Starting with this chart of Beyond Meat, I'm actually trading Beyond Meat today. This is when it was at 75. I'm trading it right now. It's around 135. But this chart doesn't have a lot of meaning right now. But as we go through the presentation, I'm going to show you a couple of things, and it's going to have a lot of meaning for you. Okay, it's kind of like almost like a magic trick. Like I'll add 2 lines to this chart after I've explained what I do, and everything will be more understood. And we'll show you how you catch those kind of big moves that you see. Okay. And also when it comes to power options, if you bought the options in Beyond Meat on January 9th for $3.75, 4 days later, they were worth $50.75. Okay. So $375 turned into over $5 grand, $3,750 turned into over $5,000, over a 1,500% return. I'm going to show you how to look for those trades, how Tesla showed the same chart at 245. And I mean, what a year for Tesla. Shopify, all these big names, okay? Starbucks when it was really low. And then the bearish side works too. But before we get to that, I want to tell you real quick about when it was going to be the last trade I ever made. Because I'm sure some of you reached that point, okay? At some point in time, you were at a point, or maybe you reached it now where you're like, I don't know if I could do this. And you have the hands over your head position, right? I was at that point. It was like 1999, maybe it was 2000, and the market was getting beat up, and the rules were different then. You could trade with $2 million worth of stock, even if you just put up 50 grand. So you weren't getting 4-to-1 margin, you were getting 40-to-1 margin, which was crazy. And so I was trading with $2 million because those were the rules, and I had almost wiped out my 50 grand account. I was down to a couple thousand, and the head trader at the firm called me in, and he said, you know, you're almost out of money. What's your plan? And it was crazy because I realized I was trading with $2 million worth of stock and I didn't have a plan. And so what I did was I kind of reached around and went through what I had learned through my trainer. And I was trying to think of one good idea I could build on, just one good idea. And the one thing that just popped into my head months after he taught it to me was, I love stocks buying stocks when they're hitting higher highs and selling stocks when they're hitting lower lows. Okay. And I was like, buying stocks hitting higher highs, selling stocks hitting lower lows. And then, like I want all traders to do, I put my own personality on it. It became buying stocks as they're showing strength in a weak market, or identifying weakness and strength. So I turned the higher highs and lower lows into identifying strength and weakness and strength. And I'll show you what I mean. And that was the formula I clung to. And that's what I look for in every trade. It's an outlier experience, and it's kept me in the long game for over 20 years trading now. So I'm going to teach you that formula today. Okay. So it starts with the SPYs. And if you look, this was March 18th. I use March 18th a lot because even though that wasn't the bottom of the market, it was when a lot of stocks bottomed out. And so if you see on March 17th, the SPYs were at 251. On March 18th, they were at 238. So the SPYs had gone down 13, 14 points. That's the equivalent of a 1,600 point down move on the Dow. So everything was, you remember March, not that long ago, the market was crashing. And I started looking at Uber, and Uber had hit a low of 1371, but by the end of the day, it had come a point off its low, despite the market closing at its lows. What happened was the stock sellers had gotten tired. And so it started to show strength in a weak market. And I put on this trade. I actually put it on social media. So a lot of people saw it. It ended up being really good for me because I was like, it looks like Uber doesn't want to go down anymore at 14. And the stock was up 100% by March 25th, which was a crazy move. But it all started with identifying the strength in the weakness. Likewise, a couple of days later when the SPYs were up 15 points, all right? The Dow was up 1,500 points, maybe 2,000 points that day. And what I did was I started looking for weakness then. No one knew that this move was going to continue going, okay? And what I did was I found Roku, which was trading at 89, down 5 points on the day, okay? Roku was down 5 points on the day. And the next day, let me just check something really quick. Sorry about that, guys. The next day, Roku was down at 83. Okay, so let's just look at this again. Roku, with the Dow up over 2,000 points, was trading down 5 points. No news. Very important. There's no news. So we go bearish at 89. The next thing you know, it's at 83. Okay, that's the formula. So what I'm going to do today is I'm going to tell you about the original Phoenix using that formula, the 11-year bull market, how the Phoenix changed and rose again. Got a nice surprise for you, got to bring to a big audience. And I'm going to talk about emerging opportunities as well as answer any questions you may have. I'm very good at leaving enough time to answer questions. Okay, so real quick, because I'm meeting some of you for the first time, I kind of stumbled into this industry. It was fortuitous. I was trading at a firm. This was after the last trade I ever made. And Nelson Schwartz of Fortune magazine came into the room. He said, "Who should I watch trade?" They said, "Watch Adam Mesh." He stood behind me. You see the article, Mesh trades nearly 10,000 shares in a few minutes. I stand behind his desk, making 20,000 in the process. Clad in a scruffy old t-shirt and in desperate need of a shave, Mesh is an unlikely mascot for the new world of Wall Street. But it's Mesh, not Peter Lynch or Warren Buffett, who typifies today's investor. Okay? So this was a really good article. I'm not comparing myself to Warren Buffett, but I made $20,000 in a couple minutes. He did this article. The article went viral. The next year, he did another article that got even more popular. And next thing you know, I'm on the Tonight Show with Jay Leno talking about my trading success. Tens of thousands of people wrote in asking for my help in the stock market. I started a newsletter and I was providing just free education and content. But as that goes, people wanted trade ideas. So I launched my first subscription trading service right after the 2008 crash. You could say the time I was lucky, but I called it the Phoenix because the Phoenix is the mythical creature that rises from the ashes. So I launched the Phoenix in 2009. It was a well-timed launch of my first newsletter. And I went back and I looked at the early trades there because it was the same formula, strength and weakness. So PNC Bank was the first Phoenix trade we ever made. And we put it on, these were stock trades then. I'm gonna tell you how we changed that. At 1651, and it went to $129. We put on Wells Fargo. I remember buying it at 8 saying, well, worst case, it goes to 0. It's not that far away, but it went to the 50s, which was crazy. So the Phoenix had early success, JP Morgan at 35 to 99, Salesforce at 25. It's now over 200, Starbucks at 10. God, I miss those days. But we're finding the next version of all of those now. But what happened was the market kept going up and up and up. And it's the same reason why present day you see Tesla splitting and Apple splitting. Stocks were getting too expensive. It was becoming too rich for anybody to get in the game. And so I started getting involved in options and I shut down this award-winning newsletter because it didn't make sense anymore. I put people either could stop or they went to a new service. So it was very successful. I just didn't want to do it anymore. And then in 2018, not 2020 March, but 2018 December, we started seeing the market sell off again. And we saw big moves. And it's important to know this because we're talking about the markets today. And when we were doing our internal meeting and our breakdown of the markets, what we said was this. Right now, the market is going up still. It's not raining, but there's dark skies. So don't be surprised if it rains. It's starting to bubble. It's starting to show some signs of weakness. And that's actually when we do even better. So when I saw NVIDIA, and this is in 2018, go from 263 to 133, it's like over 500 now. In 3 weeks, Facebook went from 207 to 135. IBM went from 180 to 115. So I called up my team and I said, well, another thing is when the news goes from CNBC to NBC, or they're not covering the markets on just Fox Business, they're covering it on Fox, you know the markets are in play. And I was getting asked to do these interviews. I called to my team. I said, let's bring back the Phoenix letter, but let's do it in a different way. And so we brought it back using this formula, the market mercenaries, options, individual stock selection, market momentum reward, which is the most important part. I'm going to spend the most time on that. But mercenaries is, you know, as I brought it back 2020, I've had a firm for 14 years. We have a lot of people to take care of. So I really believe in surrounding yourself with people that are better in certain areas than you. So Christian Tharp has been with me 14 years. He's a chartered market technician, highest level of technical trading there is. He helps me with an overall, is the market going up or down approach, right? Because before you can identify strength or weakness in a stock, you got to have a feel for market direction. And Christian was the one who says, don't be surprised if it rains today. Steve Smith worked with Minionville. It was a great newsletter. I think they shut down, but he was there for a while. Then he went with James Cramer at the Street. He helped reduce risk for a multi-billion-dollar hedge fund. He also was a dual threat, like I said, because he could write about options and he's an options trader who knew he had been doing it more longer than I had. So I brought him on the team and Mike Koenig to really specialize in helping beginners get up off the ground. So that's my team. Options. This was one of the biggest changes in the new version, the Phoenix 2.0, as you would, when we switched from stocks to options. So some of you on here trade stocks, some of you on here trade options, some of you on here trade both. If you're just a stock trader, I'd like to convince you to try options. If you trade both or just options, I just want to spend a minute just to reinforce why that's a good thing. As an individual trader, present day, unless you're planning to hold stocks for years, and most people aren't, there's no point in trading stocks over options. Options, if you're trading them in liquid stocks, offers a defined risk opportunity with that unlimited chance of reward. So as an example, when we were looking to put on 200 shares of Square, right? If we want to buy 200 shares of Square at $57.15, it would cost $11,430. But when the market's looking scary, people don't want to put 11 grand in, or that's a lot. Some people's trading accounts are 5 grand. So no one wants to buy 200 shares of Square. So instead of putting the 11 grand in, if you just buy 2 contracts for the right to own Square at 57 for 37 days, okay, 37 days is a lifetime in this market. It costs just $4.60. So for those same 2 contracts, the trade would cost just $920. And the minimum it would cost to get involved would be $460. For my trades that I do with the Phoenix service, because I want to have people feel comfortable getting started, the average cost per contract is $2.70. Okay, so the average risk per trade, if you were doing 1 contract, would be $270. So Square at 57, when Square moved to 74, it went up 17 points, okay? The option went from $4 and change to 17. That's the beauty of it. The option price moved just like the stock price. So instead of putting up 11 grand, you put up $900, right? And if you would have put went from 50, Square went from 57 to 74, 17 points. If you had bought 200 shares, you would have made $3,400, okay? When Square went from 4 to 17, okay, you made $2,600. So there's really no penalty for trading options, you know? And you don't have to hold it till expiration. With 15 days to go, you could get out of it. So you were able to make almost as much, a couple $100 off, but you risked only 10% of what you had to as a stock trade. Okay? So that's why we use options instead of stocks. Now, for the best part, we're going to go over market momentum and reward. Now, this is the formula I use to find the trades. You could take this, use it for yourself, or you could have me do it for you, whatever you want. This is what I look for in a trade. It has to be an outlier stock. Something's going opposite the market on no news. So let's take the Dow when it was down 600 points one day. And these are all Phoenix trades we made. So these aren't examples. These are trades we put on in the Phoenix service. So what we identified was what's up on that day. And we found Celgene, which was up 14 points. But Celgene was eliminated because there was news that Bristol Myers was going to buy it. So it was up on news. Now that makes, that's not going to be a trade because it's not like an outlier anymore. There's news on it. But then what we started looking for was spillover stocks. Stocks in that sector were up in sympathy. The brother and sister stocks, it's called spillage, because there's a takeover in that sector. That means the other stocks are going to become in play. So we identified Guild at 65.91, up $2.40 in a down market. Okay. Next thing we want to make sure of is that there's a reward. Okay. And that means if we're right, will we get paid? And Guild had moved from 85 to 80 to 75, 70 to 65. It was in a 20-point trading range. So when we look to trade it, we're like, yes, we will get paid if we trade this stock. So now if we want to buy 300 shares of Guild at 65.93, it's going to cost 20 grand. We've already established we're not going to do that. Instead, we're going to buy 3 contracts going out 29 days. Average price is $240, and we're going to risk just $720. If you were brand new and you want to try this, the minimum to get involved would have been $240. Okay? And Guild is sold for a 19% win. Now, something else, I really like helping beginners make their very first options trade. It's important to me, okay? And so what I ask for is feedback at the end of every trade, and it's been a great thing. And what I like to show you is not examples of tens of thousands of dollars being made, but real people having success for the first time. And I do this just to inspire you that you could do it too. So Ron wrote in, my first trade was with AT&T. So this lift was my second. I only bought one option. And on the third day, I sold it for a profit of $396.63. Thanks. You know, that's great. Great service, paid for an entire year with existing profits and made more on top. This is my first Phoenix trade. Wow. I love that. Wow. The enthusiasm of a new trader. I made 60% profit. Thanks, Adam and crew. Looking forward to the next trade. Signed up last week. Lift was my first one. Decided to take a bit more risk and go for the 25 strike. Close save with a 30% profit. Amazing. That's all I want to do is inspire you to make your first trades, or if you're an existing trader, just give you great ideas to trade with. Square, we keep track of all of our trades in what's called a trade portfolio manager. So we show you the date we enter the trade, the action, whether it's a call or a put. We never do anything naked. It's just calls or puts with defined risk trades. The quantity we do, the strike, the price we're getting in and out, and the profit and loss at the top. Okay. Papa John's Pizza. I love this trade because it represents everything my formula is about and what the Phoenix is about for trading. So what's the difference between fundamental and technical ideas? So fundamental is who are the owners of the company? What are their earnings? What products do they make? Technical is you don't even have to name who the company is. All you care about is the chart, the momentum, the reward. All right. So Papa John's Pizza had announced, and one more thing with that, you could identify opportunities to trade based on fundamentals. You know, you could be a fan of the owner. Elon Musk is the best example. But let's say it's reversed. Let's say you didn't like Elon Musk. Let's say you thought he was too flamboyant. You wouldn't short Tesla just because you didn't like him. Does that make sense? You want to trade based on what the stock is telling you. The fundamentals are just the idea to watch the stock. You like Starbucks coffee? Keep an eye on Starbucks. You like betting on DraftKings? Keep an eye on DraftKings. You have an iPhone? You can watch Apple stock. But the trade is always going to be based on the technical part. So Papa John's Pizza came out with what was called a royalty relief program. And that meant that their existing franchises that were losing money, instead of letting them go bankrupt, they were going to subsidize them. Now, it's a nice idea and concept, but they're not the Federal Reserve. They can't print unlimited money. So we thought it was a bad idea. But fundamentally, the stock continued to go up and up and up. But then something happened. The technical started to support our fundamental thesis. The purple is the Dow, is the NASDAQ. The light blue is the Dow. And these were going up, and Papa John started going down. There was no more news out. It just started underperforming the market. For us, that's going to identify a bearish opportunity. So we bought 4 of the puts for $1.60. Max risk $640. The minimum to get involved in this trade would have been $160. And then we sold some at $330, which is a 100% win. And we sold the rest at $505, which was almost a 400% win. And we keep track of it all here in the trade portfolio manager. Okay. So you would have made almost 100% on your money in this trade. And this was a Phoenix trade. Now I'm going to show you these patterns again and again of the stock either outperforming or underperforming the market, and that identifies the opportunity. You might think it's the same pattern over and over. Yes, that's how I've been trading for over 20 years. That's how you stay in the long game, right? If you could hit a button and every time you hit the button, you're successful, why would you ever stop hitting that button? Now, some people say I'd invent a different button that does even better. No, fine, do that too, but keep hitting this button. So if you look at Activision in dark blue, it's outperforming the markets. So we put on a bullish Phoenix trade in Activision. We got in, cost was 251. Sorry. Cost was 251 and we sold it for 395. Okay. AT&T outperforming the Dow and the NASDAQ. All right. Now, normally most people would think this is a buy and hold stock. We saw an opportunity. We bought calls, the 34 strike for $1.52, and we closed them for $4.45. So if you put up $1,500, you would have sold that for $4,450. Okay. Take two, you see right over here, it starts to pop above the rest of the market. This is all we look for every time. 37% win in take two. Okay. The Phoenix track record, we started doing it when we opened it back up. It was successful beforehand, but after a couple of years, we opened it back up in December 2018. Okay. We've only had one losing month. And it was my mistake. I got a little bit greedy in a trade, and after we made money, I pressed it when I shouldn't have pressed it because it was no longer underperforming the market. That was my bad. But from December 2018 and all of 2019, we did not have a losing month. We've had losing trades. We never had a losing month. In 2020, our record is, what month are we in? August, January, February, March, April, May, June, July, August. We're going to be 7-1. Okay. The best part is the equity curve, and 2020 already beat 2019 in terms of performance. Okay. So the formula works. We're very selective in what we trade. We made money in March when the market crashed, made money in April, May, June, July. Pretty much all we need is movement. Okay. Beyond Meat. Oh, remember I told you I'm going to add 2 lines at the beginning. For anyone who got here late, I showed a chart of Beyond Meat just by itself. And I said, I'm going to add 2 lines. And after the presentation, you're going to understand what I mean. This was Beyond Meat, that same chart, but it's outperforming the Dow and the NASDAQ. So we got involved and we made 70%. I'm actually trading that stock now. Alex said, new to Phoenix Service just did the ATVI trade in the 241 out at 395, 64% or $616. See, I'm not showing you 10,000, 20,000. The bigger traders are going to trade big. I like to let people know you could start small and still have success and still do this. Chuck, that's the fastest 350 I made in a long time. Michael F., I love this one. The best experience with options I've ever had. I lost so much in the past, and now I'm beginning to get out of that hole. Yours is the best service around. Thanks, Adam. Okay. Sometimes, if we can't find any trades, we will put on market trades. We'll usually buy options to protect ourselves going into a weekend if things are looking shaky. So one time we bought the 329 puts in the SPY for 456 on a Friday. We sold them Monday for 775. We couldn't find anything going up. I guess it was a tell. This was at the beginning of the Corona. We put on a trade February 21st. We bought the 333 puts in the SPYs, which was amazing, for 225. And we sold them for 975 on that Monday. Okay. And if you look at the top, I say here, so I do ask people for feedback. I say, let us know if you got it at the end of every email. And at the top, you can see what people are saying. I'll take 65% win for sure, as Amanda. Glenn said, closes for 65%. This is one of those SPY trades. Curtis filled at 448, out at 850, 785 on 2 contracts. So it's fun to see this thing work. Patrick in at 405, out at 74. That's 91%. Thank you. Okay. Now, let me show you this. This is a fun example, and I want you to mentally kind of put yourselves in the game right now. Here's where I like you to put your pilot hat on. I've been driving a car right now. We're going to switch places for a second. And what we're going to do is you're going to get behind the wheel and you're going to, Zoe, that's the nicest thing I've ever heard, by the way. Really, honestly, I love Zoe. Zoe, when I make my offer, you could have 50% off. So anyhow, what I want you to do is I want you to get behind the wheel. And I'm going to move over into the passenger seat. And the reason I say that is because if you're not driving the car, your brain's shut off. You're on your phone. You're looking out the window. You're not thinking about where you have to go. So the reason why you're switching from the passenger seat to the driver's seat right now is I really want you to think about where you're going to go. So here it is, Starbucks. Ready? This was in March. Market had been getting beat up. This is the Dow in blue. This is the NASDAQ in purple. This is Starbucks starting to outperform the market, okay? So I'm sending this alert. You're going to get this alert via your phone. You could get it texted to you, emailed to you, both. And it says buy it open 2 of the 417.55 calls for a net debit of around 530. Now, why was it expensive? Why was this a little more than that 270 average? Because the market was crashing. And what happens in times of high volatility, the premium for these options goes up. So we said to buy for $5.30. The minimum you could have done this trade for was $530. I know it's weird, right? As the market crashes, options actually get more expensive because there's more opportunity. So here's where I want you to chat in for the first time into the chat on the Zoom. I hope you could all see where it is. When you got this alert, email and texted, assuming you have a trading account open and you have $5,000 or more in your account, would you buy one of these calls based on that alert? Yes or no? Just chat in yes or no. Dave's in, SP's in, Neil's in. It's over 500 people on here. Yeah, let it fly. Awesome. Right? And I think it's important to picture yourself doing that. It's important to say, would I make the trade? Because if your answer is no, you're going to have some questions as to why not. Like if you're looking at that and really doing it, that's how I make my decision for if I'm going to use something. You know, if I see this, am I going to get involved when I see this alert? And if you did, so if you bought this for $5.30, now what that means is if Starbucks went to zero, the most you could lose is $5.30. That's your total risk on the trade. You're going to be in the trade for 25 days. The S&P was moving 2% a day. So that's April 17th. The next day, you get the alert. Sell to close the calls for $9.55. Your $500 just became $955 in one day. Okay. So for everyone who said yes, you made the right decision. Let's do one more. Oh, Richard nailed it. So I'm going to tell you that I just did over 100% on a Starbucks trade. I literally doubled my money. You're awesome. Thanks a million. Okay. And you notice he said just renew for 6 months because I gave him an unbelievable opportunity to try it for 6 months. Good news is, despite all our success, I'm going to give you the same exact opportunity to try it for 6 months or 1 month in a second. Work, you see over here, same chart, outperforming the markets. Okay. So now again, you're in the driver's seat. We're going to buy to open the 417.20 calls for a net debit of around 240. Okay. So your risk would be $240 to get involved. Now you don't have to chat in this time. You can just think to yourself, would you be involved in this? Is this something that would excite you? Right? Well, if you got involved a couple days later, those 240 were out for 390. Okay. Great trade. Kronos, the weed stock. People get into weed stocks in and out. We got involved in this one for 76 cents. We sold 4 for $1.02. Let the rest run for a little bit more. 34% profit. Okay. What I'd like to invite you guys to do now is I could show you these examples all day, but the most important thing to do is to say, let you experience it. And so as part of this EMC Summit, what I did was I put together an amazing opportunity for you guys to come in and check out the opportunities. So I want to provide you with access to the Phoenix letter. It's going to be calls or puts. We'll send alerts via email and text on any position we update. So I don't just send you the entries. I, of course, send you the exits too. We explain the why behind every trade. We provide exclusive training for anyone that's like, I've never made a trade before. We'll help you. And amazing VIP support. Okay. And you could sign up now at adammesh.com/EMC because that's the name of the summit. Okay. Now our corporate rate's $29.95 for the year. Some of you may know that already, but what we're doing today is you could get involved for 1 month. Your price will never go up. You're never going to pay the corporate rate. You could lock in $89 a month right now at adammesh.com/EMC, or that 6-month offer that Richard used to double his money in Starbucks. It's 6 months for just $397. So if you do that, you save $180 if you do the 6-month offer, and you lock in this price forever. You'll never pay more than $397 for 6 months. And this is crazy because you're getting actionable trade ideas every week. The Wall Street Journal costs $37 a month. And that's just for information. This is for trade ideas to make money. So go to adammesh.com/EMC to sign up. Now, the first 100 people, or 20%, less than 20% of the crowd now because it's such a big crowd. First 100 people, not only will you get the Phoenix, you'll also get access to my Tuesday Insider Call. Every Tuesday, we do it at 11 a.m. It's recorded if you can't make it live. We go over the market overall. That's where we said, today was where we got that quote. Dark skies, don't be expected if some rain falls. That's a $97 a month call. You get it free with the Phoenix. You get our Options Academy on Monday, extra education for anyone who needs help. Plus, I said, weed stocks go in and out of favor. We provide research on the marijuana industry every week. I have a team of writers that sends us out. It's $147 a year. You get it for a lifetime when you sign up today. So even if you don't renew the Phoenix, you keep the Marijuana Insider. Okay? So go to adammesh.com/EMC. Normally I do like an hour 30, an hour 40 minutes on one of these webinars, but there's other speakers and stuff. So, I got to manage my time. So what I'm going to do is this. I'm going to show you a couple more examples as you're going to sign up. Remember, the first 100 people, you get a bonus call, a bonus academy, and you get a lifetime subscription to my Marijuana Insider. Whether you do the $89 or the $397, but you lock in these prices and you never pay more than that, no matter what. So you go to adammesh.com/EMC. If you have any questions, you can call 212-774-5983. I'm going to keep teaching as we go. This was IBM. I want to show you another bearish example. IBM. Over here, you have the NASDAQ. Over here, you have the Dow. Over here, you had IBM underperforming. So we're going to do a bearish trade. Now, we're not getting short. It's still we're going to buy an IBM for $445, and then IBM went down, and we sold it for $635. Now, the only example here is this was the recent trade. We followed it up. IBM went down. We made good money in it, but then I kind of chased it, bought the puts again, and it kind of stalled. So IBM, even though I've traded it 6 times, 5 I've been right. We just lost on IBM, so that was the reason for the losing month, first ever, because I chased it. Twitter outperformed. We traded Twitter at 34 before it went to 39. These are all Phoenix trades. eBay, we got in at 50 before it went to 60. TZA, now look over here. It was underperforming the market. We're not going to trade it, but this is something that could get very exciting if the market starts to tank. This is 3 times short the small caps. So once it went above here, we got involved. We traded TZA on a breakout, and people were really happy. And you see, Ken said 19 out of 20 winners he got from me. So we do have losers, but only one time a losing month. Snap, we traded at 21. That made a really good move for us. Intel, we did bearish. See, it's underperforming the market. So, we're just very selective in looking for these ideas. Plug, we traded. Oh, so this real quick. So this is when I was on Fox with Maria Bartiromo. And the reason I bring this up is because they were asking me about Bitcoin, which actually has kind of gotten popular again. But I told people to stay out of it at 17,000. The quote from Fox Business was, Bitcoin outlook months away from first horror story, is what I said. Okay. It went from 17,000 to 3,000. And my whole thing was, I don't want people trading Bitcoin. I think marijuana has a better future. Okay. And I posed that to a lot of financial minds. 5 years from now, what will we look back on as having been a better investment, crypto or weed? The unanimous answer was weed. And so I put together a report that gives you all the different facets of the cannabis sector each week. It could highlight under the radar picks, things to stay away from. But that came out of that Fox appearance, which is kind of cool. So that's $147 a year. It's yours free, even if you sign up today and you don't even extend. I just want you to have it. So that's a really good fast action bonus right now. It's at adammesh.com/EMC, or you could call 212-774-5983. Okay. And I think I covered it. Yeah, I covered it in enough time, which is awesome, where I can now answer any questions that you have as they come in, which is cool. Okay. So anything you want to know about, Zoe, Zoe, you should call up. I'm giving you 50% off for that Tom Cruise comment. You made my day, for real. 212-774-5983. Any questions you guys have, I want to answer. And I see you're all signing up, and I appreciate that. But, I left time to make sure that you really understand this. So anything you want to know. Oh, great. Average hold time. So like that AT&T trade, we were in that for a couple months and we made like 400%. Sometimes we're just in it for a couple days. Right now, SP, we're in 3 trades. We're actually, we bought a put in the ETF that's short the Japanese yen. So it's not naked, but we think the yen is going to fall. So we bought puts on that going out like 90 days or 65 days, I think. We have a trade in an alternative fuel play. And then we have calls in December on a cyber technology stock, because I think during the election, cyber tech's going to get really big. This stock hit a good price point. It's been holding flat. You can actually still get in it when you join. It's in there. So we're kind of in 3 trades now, which has been unusual for us. But typically, I'd say less than a couple weeks. Are your charts that you're comparing, are they daily charts? No, but I do a breakdown. So like if you're seeing a market crash, like that Uber chart was daily chart. But typically what we're going to do is we're going to break down a 1 year, 6 month, and 3 month, piece it all together and see what's working for us. I like to look at it from different angles so I could get the best picture possible, Scott. Okay. You're welcome. These are good questions. Keep them coming in. You got a great group here and I want you to continue to learn. And also make sure do you all understand the formula? You understand how I approach the trades? I want to see something too. Oh, I got text coming in. Is there any guarantee for $397 for 6 months? I think if you click on it, I think you can get some back if you're not happy in the first 90 days. It's not that much to give back because it's $397, and the 89 you could just stop. Okay. Okay. All right. What do you mean by good trading range? Are you looking at volatility? No, so what I'm looking at is the stocks versus the market. Okay, so I'm looking for things that are outperforming the market or underperforming the market. Okay, does that make sense? Where do you go to see if there's news on the company? So I have like 4 different sources I check. And I'm always watching. Now I even include social media in there, Laura, and I'm pretty much just watching the markets all day long. Like even when I'm on here, let me just show you something. Even when I'm on a call like this, I have the trading up on my phone. And yes, I use Tastyworks. So I have the trading up on my phone. Okay. Wow. Let's see. I never bring it up though, because it distracts me so much. Holy cow. I'm up a lot of money in GoGo. Anyhow, so it's adammesh.com/EMC. All I do is watch the market. You come on the calls. This is just a way into my community to let me know. I want you guys to see who I am, get a feel for what we do, see that I'm real, that I love what I do, be able to ask questions in a comfortable environment, and just feel good about getting to know us better. Because, it's all about finding the right place. And I think when we show people that we're real, they feel comfortable getting started and feel comfortable moving forward with us. So again, yeah, all of you that get the first 100, you get a lot of bonuses. I'm just looking now on my phone. Yes, scanning. So it's like 33 in. So there's still room for 67, whether you take the 89 or 397. Great way to get in. Okay. How much for a lifetime offer? I never even offered a lifetime. I don't know how to commit. Maybe you could get like some kind of 3-year deal special. Call the number on the screen. I like people with that attitude, by the way. So call this number on the screen and make a deal with one of my team. Or if you want, anyone has questions, just chat in my number and my team will follow up with you. Stephanie said, I can attest the training you get with Adam and his team is amazing. Thank you. One more questions. I save time. So I try to go quick to leave a lot for questions. Anything else you want to see? I think the most important thing is when you get down to the makings of the trade. Okay. So here it would be. Like this work trade. I think this is just to, someone said, could you go over it again? This is the premise of what we do. Okay. Light blue is the Dow. Purple is this one here is the S&P. Okay. And in dark blue, it's work. So when work breaks out of the market, and you can see the range I'm using here. So for whoever else has the range, this is like a 3-month chart I'm using. Okay. When work breaks ahead of the market, that's when our alert comes out. And we say to buy the 20 calls for a net debit of around 240. So if you were brand new, the minimum you would risk per trade is $270. And then we sell it for $390. And that's trading. That's like a real trading experience. Okay. Someone asked me to go over what you get again. So you get all entry and exit emails and texts, VIP support. And again, the first 100 get all these extras too. You'll get your first trade either this week or next week. Definitely won't be more than that. Okay. Awesome. Awesome. Yeah. I mean, how many of you already trade options? Just write yes or no. I think the market is kind of bubbling ahead of the election, and I'm really excited for what's to come. I'm really excited. So Stephanie, you're already in, I know. For all of you that trade options, you'll love this. It's great. You'll get 1 to 2 trade ideas per week, but you will also get access to our calls where we're discussing everything. Neil, you made 10,000 on Zoom today. That is sick. Congratulations. That's awesome. I bought them after hours last night. I sold them for a couple $100. I didn't hold it until today, but I own the stock. You like options, love options, what we specialize in. Between our Options Academy, our insider call, and this, you're gonna get so much good value. So really encourage you to check it out, adamesh.com/EMC. If you don't trade options, I encourage you to learn options because it's just the future of trading for the individual trader. All right. Do you all feel like you learned something cool today? I mean, following Tom Sosloff's never easy. I learned more about options from him than anyone else. But such a great group here today. Honestly, such a great group of people here today. A lot of energy, which I love. A lot of people signing up, which I love. So what are these questions? Any special technical indicator that you use? See, that's the thing. My formula works for me. So it's kind of like golf, right? If you have a golfer and his swing isn't the perfect swing, like even what's that guy's name now? Bryson DeChambeau or whatever. He has this powerful swing that you've never seen before, but it works for him. So when you find something that works for you, you just keep pushing it. And so that's what I do. 1 to 2 trades per week. Okay, so for the $397, if you're unhappy at any point, you get a prorated credit towards one of our services. Okay. Okay. It's not the same as the Phoenix Finder, Teresa. I don't know what the Phoenix Finder is.
Hey, so Adam, hey, it's Raleigh here.
All right.
Can I pipe in with a question? Hey,
Please,
so yeah, so anyway, you just said a few moments ago that you really like options because you think it's really the future of trading, especially for retail traders. And could you kind of just recap that? Why do you feel that way? Why do you think this is the future of trading, and why should retail traders learn how to trade options?
I love that question because when I was trading stocks back in the day, they didn't have weekly options. That's something that started coming around, and now liquidity came in even more. And what we saw in particular this year, when sports was down and there was pretty much nothing else to do, the markets became more popular than they ever have been. A lot of people opened Robinhood accounts. A lot of people opened Tastyworks accounts. And what they noticed was there were more people than ever before trading options. And so when you have a liquid marketplace where you can get in and out of stocks easily, it's amazing. But now add in this. Stocks is where all the algorithms go. When you have the computer trades, That's stock. So it gets that back and forth, and you see some unnatural moves. So you could see a stock price drive $1, but the options will only move 10 cents because they'll know it's fake. Okay. So the options move more true than the stock. It's more of a real trade.
Okay.
Then add in the fact that you could define your risk, right? You know your bottom is zero. If you buy a $2 option, you can only lose $2 versus the stock. If you're going long, you have the risk the entire house. And if you go short, nobody should ever go naked short, especially in this market. I mean, Chesapeake announced bankruptcy. It went from 14 to 71. Kodak definitely wiped out hedge funds. There's a lot of shorts that just end careers. So we never go naked short. We'll only buy a put, which also, if you buy a put for $2, like let's say you bought a put on Tesla at 1,000. If you shorted Tesla at 1,000, you would have lost 1,000 points. If you bought a put for $2, the most you would have lost was $2. So options for the individual trader is more liquid. You get a better percentage return on your money. It's safer. There's nothing. Unless someone said, I want to buy 100 shares of Coke and hold it for the next 5 years, then you buy 100 shares of Coke. If you have a long-term buy and hold investor, sure, have at it. But other than that, for anyone looking for the more actionable ideas, that's trading their own money, that's looking to do swing trades, options is the way to go.
Outstanding, Adam. And I think that's a great wrap up for a fantastic session. Thank you so much for your time today. I know that there's a little bit of angst coming into it with Wi-Fi issues, et cetera, but you came through like a champ. Love your hat. Love the environment, and obviously love your knowledge. You're a real pro. You know how to trade the markets, and I think you gave us some great information here. I'm going to grab the screen from you right now. And, you're welcome, Adam. And I tell you what, send some of that rain down to Texas, would you? I mean, some parts of Texas got rain, but here in Central Texas, I don't think we've had rain in like 3 months.
Be good, everyone.
Take care. Adam Mesh, what a great job that he did. And once again, folks, his special offer for the Phoenix system, 6-month unlimited access to the weekly options alerts that he has, the membership pass to the weekly market call and the big trades, and the exclusive VIP support and customer concierge services. Go to adammesh.com /EMC. I think he did a great job. And we are pretty